Well, good morning, everyone. This is Corey Winstead with AgriVisor, sitting here with Joe Camp and Dale Dirkholz. What a morning we've had, fellas. A little excitement, some fireworks.
Just a little bit.
We're got paper shuffling here. Dale just ran in. He's got his hair is a mess. He's gone crazy here, but we are ready to kind of break down this report. We've got a slideshow here for you that we'll touch on. Give you some information about there are a lot of reports today, really, everybody. But this is the big one, right? This was the one that we've all been waiting for since what, July? So we're ready to go here, but we'll talk about the USDA report, obviously with quarterly stocks, crop production, and then the WASDE side, and then winter wheat seedings as well, which I heard Dale Dirkholz give a yes over at his desk when the numbers came out, and I think he's got something to say about that. So with that being said, let's just quickly talk about, hold on one second, folks, just having some
technical difficulties.
Yeah, some technical difficulties here. Can't get the slide to change, but while working on that, basically what I want to touch on is AgriVisor. For those that may not be aware of who we are, we're a risk management firm, essentially. We're owned by Growmark and the Illinois Farm Bureau. We've got relationships with the Illinois Farm Bureau and Iowa Farm Bureau and many elevator co-ops throughout the Midwest. And we appreciate your attendance here today. Look forward to hopefully you're able to gain some information out of this meeting today. But basically what we're doing here is our goal is to help improve the bottom line for you, the farmer, by giving you some commentary and advice on maybe how you could just generally how we think this market might go going forward after today's report, since that's what we've been waiting on. So at any time while we're here, if you're looking at it and you're looking at your screen, there is a box that you can type in questions. Feel free to do that. Type in questions. We'll read through them and try to get as many answered as we possibly can as we're going through this. So with that being said, let's get started, guys. What do you? Well, I thought we were back up and running here.
We've had this issue before, and it must be my computer, Joe Camp here. I'll take the blame for now, but I don't know if we have to be pressing spacebar or right or whatever.
Oh, we're going to restart this program. So I guess that's what you get for doing this on the fly a little bit here. So yeah. Here we go.
We've tried about it.
So we're up and running. So here we go. So guys, at a glance, here's what's going on. Winter wheat seedings fell well below expectations. Yield was down on corn and soybeans both. Harvested acres, corn was unchanged, down about 600,000 in beans. Just a real summary here. Carry out, corn was up, soybeans were down. So corn's initial reaction on this, up 8. Soybeans up 13. I believe they were up just a little bit more than that than when we walked in here. And then wheat is up roughly 7 to 13 cents. So guys, after all of that, let's touch on the quarterly stocks. That was a big number that we were looking at coming into this. You want to slide over here, Dale?
Well, actually, the quarterly stocks numbers themselves, the 11.2 billion corn, the 1.7 billion on wheat, and the 2.7 billion on beans weren't real surprises. The corn number basically keeps us pretty well intact. It looks like for being on tact when we look at feed and residual demand for corn. I noticed just in the S&D, the USDA left it unchanged at 5.3 billion bushel. I think that's appropriate from looking at the first quarter usage numbers there. It seems to fit that mix pretty well. The bean number was the one that, well, let's go to the wheat. The wheat number there told us it's a little high, and it kind of implied that, the wheat feeding number may not be quite as high even as what the USDA is building in at this juncture. So we'll have to keep an eye on that as far as the wheat is concerned. The bean number, the 2.715, interestingly enough, still tells me that maybe the bean crop is overestimated a little bit, but we really need to see the confirmation of that when we get into the March stocks report, because you can't really say much because you do have some volatility with these stocks numbers the first take we have right after harvest.
Yeah, absolutely, absolutely.
Take away wheat there, and you look at corn and soybeans. Dale mentioned that there's nothing huge here because you can look and see the USDA is relatively close to the trade average there, but we see on both corn and soybeans they are slightly below what the average guess was. And for soybeans, that has become a consistent pattern. That's 8 out of the last 10 years we've got the USDA coming in under the trade guess. So not a big surprise, but not any real fireworks to come out of the stocks numbers, even though this is what we were given first glance to here today.
And with the second big crop, the corn number is no bigger than it was last year either,
Right.
which I think is interesting. We came in this year with a lot bigger beginning stock of corn than we did a year ago. So, it says there are some slight positives in those, maybe nothing huge, but at least some slight positives.
Well, we got about well over 1 billion bushels a month we consume, average it out on corn. So now we got to figure out how we're going to chew through all this crop, and I guess that leads us into the balance sheets.
And here it is. Here it is. So we kind of went over a summary of it, but this is the balance sheet as of from December and the changes you see from where January is off to the right. And some of the demand, we know we've got the supply. They did lower the yield a little bit, but they lowered the export number. That's the big change, right? In really in the demand piece. But really, guys, that wasn't a big surprise, was it?
That was talked about, and some people have been arguing it's a slow pace of sales that we've had so far this year, and the slow pace of shipments that the USDA might still have been high. And I think even with this number here, we'll still have people arguing it's still too high yet.
Yeah.
I'll go back to the yield number, and we always try to guess what the USDA is going to tell us here, and the adage is that big crops keep getting bigger. Well, until we get to the annual crop production number here in January. And what did the USDA do last year when we had the big bumper crop, cut corn yield by 2.4 bushels an acre? Now this year down 9/10. Not a real surprise that they're backing off here, and they did the same on soybeans.
Now I haven't had a chance to go.
And that's going to be important going forward too, because people, when we see these November numbers in future years, are going to go, we've had a tendency for that January number to come in lighter. And so going forward in future years, it's going to cast some doubt on those October, November yield numbers we get.
Mm-hmm. Absolutely. Absolutely. What I was going to say is I didn't see a state-by-state breakdown on this yet, but where do you think those states were that missed the mark a little bit? You think they lowered on Illinois, maybe lowered in Ohio? You guys had a chance to?
I haven't had a chance to really look over them at this point yet. I was looking more at
the general,
at the demand numbers, but just taking a quick look down here. Indiana or Iowa, they actually took the yield up from 189 to 192. But if I go down here, Nebraska, they took down 2 bushels to 185. If I back up to Minnesota, they went up a bushel. So it looks like it's a variety of things here, but like in Illinois, we went up on bushels there, but in Indiana, they went down. In Ohio, they went down and went down quite a bit. So just looking at a quick scan here, those areas that did have some issues early on with the crop this year is where we've seen some of the yield slippage can take place. And then when you get clear out into the plains, we've seen some slippage and some yields as well.
Yeah, very good, very good. Anything else we want to touch on this? I know we left acres, harvested acres, pretty much the same. So not a lot of changes here. The ending stocks, of course, increased a small amount. So nothing that screams that small amount. Obviously, by the reaction of the market in corn today, nothing really in here screams $3, $2.80, completely bearish market, right? This isn't going to, I guess what I'm asking guys is, this isn't going to settle out after today's activity and we're just going to continue to grind lower, are we?
We've got a lot of outside influences here. Luckily today we're focused on the report, so we're looking at these S&D numbers and factoring them into the trade. So we could have some slippage still yet. It's not, but the whole theme of this report to me is take aside the winter wheat seedings report, which ultimately does lean friendly for corn, and Dale will tell you more about that. He's been talking about it right for a long time, how this can be key here. And so winter wheat seedings, yes, friendly, absolutely. But overall, report day, It's not overly bullish by any means. It's just not bearish news, and we have had nothing but bearish news for some time now. And so you get a report like this, and it's reason to cover some shorts. It's reason to do a little bit of buying here. Long term, well, we'll talk about that. But it's a start. Yeah, no real bearish numbers, though, that from this report lead me to believe we should be selling off right now.
I think that's the real key. We didn't get any bear numbers.
No bearish
No more,
news.
no less. You know, there weren't any real bear numbers. You know, some of them, you know, outside of the winter wheat planting numbers, you know, some of them were a little negative, some of them were a little positive, you know, but on balance, you know, it's neutral to maybe just a slight plus to it. But there weren't any bears. And I think that's what people were really fearful of. Going into the report, there were an awful lot of people that had implied that, you know, if we got a neutral report, it was probably going to have a friendly reaction in prices.
Yeah. Very good. Very good. Well, let's move to the supply and demand table on soybeans here. Touch on that. Looks like we did, again, we lowered the yield. We lowered acres a little bit, not by much, but lowered both. Lowered the overall production, obviously, because of that. But you know, we're right in that same range. We dropped it 25 million bushel from 465 to 440. So not a huge decrease, but man, the beans are rocking and rolling here today. So what's the story there, Joe?
You know, first off, let's look at the top and look at the yield cut. Last year, the USDA did bump up by about, I think, 0.3 of a bushel, their estimate for soybean yield. And here they knocked it back by 0.3. And this was a big crop, and we know that. And we've talked about that for some time. So yield is important here. When it carries through to the total supply here, we do see that it's cut by more than 50 million bushels. So that's important. So again, it's not bearish in the sense that the USDA did not up that by a couple tenths of a point. Because if that was accompanied by what we see further down the balance sheet with those small cuts in the export number and the residual, then we would have had a different story, one that has a carryout approaching 500 instead of one that's moving lower.
Dale, I'm going to ask you this. We've talked about this for a while. It seems like over the past few years, the USDA has always underestimated the demand for our soybeans. And, you know, if we were having this exact same webinar a year ago today, we're probably looking at a very similar ending stock number, right?
Yeah,
roughly in that 400. Maybe
right.
They started lowering it, but what's your thought going forward? Is this just the first step here?
The one surprise I see today is the export number. They lowered their export number here by 25 million bushel, not a big adjustment necessarily, but they took 25 million bushel out of it. And frankly, when you look at the pace of sales and the pace of shipments we've had so far this year, I could argue maybe we could see just the opposite. So I think what they're counting on at this juncture is, you know, the movement out of Brazil and Argentina are just going to so dominantly overwhelm us that it's really going to force a steep slowdown in the latter part of our marketing year. And I really question whether that's going to happen or not. So at some point here, I guess my real fear is that, you know, when I look at we're on pace to do what had been the estimate here back in December at 1.715, do we see that they're going to be forced to reverse course at some point in time in the future and increase this number here again? So that's a one takeaway I see at this time. And, you know, if that would be the case, then we start working to carry out more towards the 400 million bushel mark. And if the crop is actually overestimated a little bit, which there's a subtle hint, but it's not a big, I'm talking 25 million at most, given the stocks number we had there, then you start talking about, well, what happens if we see that thing slip under 400?
Right. Yeah.
You know, and you start working the other way. And this is something I've had a few discussions with the people in the USDA about, is their expectations on demands for soybeans, and especially in the export sector, we've had a consistency of underestimation, and it's been over a lot of years, not just in recent years.
Yeah, absolutely. Joe, do you have something you want to add to that?
Yeah, we don't have slides on it, so I'll take this opportunity to mention. Dale talked about the South American crop, those stocks that are still exportable here. I want to talk about briefly the world numbers here. South American soybean production left unchanged by USDA at 100 million metric tons. Got some numbers out from CONAB, their crop agency, 102.1 million metric tons. So there's still this idea that, hey, the private forecasters, a lot of folks in the trade, still too high on that new Brazilian crop coming up. So also on the world numbers, no change on Brazilian corn production. No change on either Argentine corn or soybean production. And ultimately, we have a reduction by 3 million metric tons for both world corn ending stocks and world soybean ending stocks. So that's what I'll say about the world numbers. Not a lot of special notes for the world numbers, but those would be it, I think.
Yeah, one cautionary note I will say about the CONAB numbers that a lot of people don't readily understand. You know, when we look at our production numbers through the growing season themselves, any of the numbers, this one we've got a little bit longer lead time, but normally we've got a lead time that's about 2-3 weeks. The CONAB numbers, simply because of the data gathering process that they have down there in the vastness of the country, some of those are 4 and 5 weeks old too. And so, you know, you're really behind the 8 ball. You see some of the numbers that have come out of Mato Grosso. The state agency there has taken something close to 1 million ton out because of some of the dry weather issues they had early on. You've seen some of the privates out of South America come in with numbers that are just a little bit under 100 million tons. So I think you always treat the CONAB numbers, although they are good numbers, don't get me wrong, you understand that they have a longer lead time between when they collect data and when they actually produce the report. So, you know, you question a little bit. Have they picked up some of the issues that we were seeing crop up with the bean crop before we started to get these rains around New Year's?
Yep, very good. Very good, guys. Well, let's keep on moving here. Let's touch on wheat, the wheat supply and demand. Not a lot of changes in, no change in yield, no change in acres. So not much
the
of
only
a
change you have really there is in the feed and residual category. We went from 180 to 150, and that was the implication when you go back and you look at that stocks number and how the stocks number fit in. Because we, like wheat, like corn, we figure feed and residual as a residual number because we don't really count it. And it implied we were not feeding wheat, as I mentioned earlier, quite as aggressively as what had been built in, and that really was recognized here today.
World wheat stocks, U.S. wheat stocks, still large, more than comfortable. The storyline here is the next slide, and that's new crop wheat for the U.S. These winter wheat seedings.
To back up on those world numbers, though, that you mentioned about before we get off on this, we found a number of stories finally starting to crop up here in the commodity news media over the course of the last 3 weeks, finally, where more and more people are starting to recognize maybe we need to start looking at, and they've talked about it with corn, the fundamental structure outside of China because of the distortion that those huge Chinese stocks have upon the corn, and we need to handle that something separately. Wheat's a similar story. Out of the 230 million ton of wheat in the world we're going to have as ending stocks, about 60 million ton of this is held by the Chinese government. And truly, those are a food reserve. You've never seen any of those Chinese-controlled inventories being talked about. Well, how are they going to come back to the market? Are they going to come back to the market? Everybody pretty much recognizes those are truly a food reserve and probably are going to be kept intact. Probably aren't going to grow them, but they probably aren't going to dispose of them either, just as a prevention, you know, if we get any real issues going forward with weather and weather issues. So we really need to look at the fact that Chinese numbers do distort the world numbers.
So our next slide here is the winter wheat seedings, which is the bullish surprise for report day. We have, I guess, now 9 out of 10 years where these numbers fall short of the trade guess, USDA versus trade.
And it's something like about 20 out of 25. You know, it's been a long history at this point where these numbers really tend to come in shy and tend to see some problems. Just to give you a few rundown, Arkansas, percent planted this year to last, 66%. Mississippi, 67%. Illinois, we were down 2 at 98%. Indiana was actually up, but they were down here a year ago. Ohio actually ended up, but the Mid-South and you get into the Southeast is where we dropped off. Out in the Plains, 88%. In Texas, Oklahoma, 92%. Kansas was 92% as well. I think the big story here, though, is not just for wheat, but maybe for corn and soybeans. You know, we came in this year with wheat, and we got to remember the insurance guarantees are set in September. And we came in with low prices and a lot lower crop insurance guarantee for wheat again. And what we're finding is, especially out in the plains, people looking at this marginal land going, you know, is it really worthwhile to try to plant it? And I think we've got to start thinking about that same repercussion here with corn. Our crop insurance guarantee, if we don't move these corn much, is going to be lower again in February, and our beans certainly going to be lower unless something spins up in South America here quickly. So we have to start recognizing, are we going to lose more acres again out of the whole acreage package? And that really is the tip-off out of this.
Yeah. Where do the acres go? If we lose them out of the whole package, where are they going? I know there's, and I don't want to get, I know there's talks on CRP and there's things there, but where are these acres going to go?
The one thing that you really end up with when you look at the total package of acreage that we cannot account for because it's only documented in the 5-year ag census numbers is pasture land.
Okay.
And I think that's where we end up, because when you look at it, and it's in the Great Plains and down across the Mid-South, we had during the mid-2000s up until here a few years ago, and we're still seeing it actually come out. We're having acreage being pushed out of the CRP program. Well, it's in those areas, and you're talking about lower quality land. And when you take prices down and the production economics of these lower quality acres out there, in 2010, 2011, 2012, 2013, there was incentive to plant it and produce on it. That incentive is gone.
Oh, absolutely.
And that's where we're actually losing these acres at this point. So it isn't going to be in the heart of the Corn Belt. It's going to be more of the fringe acres if, in fact, we lose it. And so those will be the areas, again, the plains and probably in the Mid-South where we see these acreage numbers go down again.
Very good. Well, let's what do you guys, just a quick synopsis here. Joe, what do you think going forward? What are we going to see? Is this rally going to continue? Are we going to see $5 corn and $10 beans?
This is a good start, no matter. We're looking still at this outlook we have for corn futures, soybeans, wheat too, for that matter, to be somewhat range bound here early in the new part of the calendar year here. And so, a day like this, we're thinking retracement before we're thinking reversal. And so Fibonacci numbers say, from a technical standpoint, give us 360 first, 367 on the nearby corn contract. Then we're going to be getting up into the 390s. What happens then? Well, do we shake some bushels loose out in the country? Do we get some producers selling and then some renewed interest from the short speculators? I would say so. That creates, again, a range-bound trade. We get up to 390, 395, start to roll back over. We need to make a couple attempts at that, I think, before we really break through, or we need a storyline. And I think a storyline, a bull storyline, is something we can get. And Dale's talked about this before. We just don't know yet what it's going to be, right? Whether it's some ramped up worries yet again about weather in South America, whether it is meteorologists suggesting that we are likely to get the shift over from El Nino to La Nina in the year or two ahead. So there are certainly things that can bring this board higher. For now, I think it's going to be a bit sluggish, but we do have support here. So downside risk, significantly so, has got to be limited here, and that's been helped out by this report today.
I think that's a big story here is that, for now we may end up shoring up the lower end of the market at this point in time. We've had over the last, year now, we've found anytime we've gotten down to around 350 corn, that, you do have some support at that level. When you look at when we get down towards 450, 460 wheat, you tend to find markets have energy and we find a bounce. Doesn't say we go a long way, but, we do turn up out of that level. And you can probably start to look at the 850 mark on soybeans as somewhat a similar fashion. So, we may have taken away some of this bearishness at this point. The big thing, if you run the market a little bit further, maybe you ultimately get into a situation to where, some of these funds that are still carrying some short positions tend to get out of it. I don't think this makes a bull market, but I think it may end up helping us probably put in some kind of a wintertime low for now anyway.
Mm-hmm. Very good. Touch on March corn futures chart.
Still looks like a bit of a bear market to me. It's certainly in the near term we see that steep slide, but in a bear market you can certainly have technically oversold conditions. That's what we're looking at here. We're making a bounce. We're going to run into resistance again at the retracement targets, maybe 360, then 370. The 20 and 50-day moving average on the way up. So a lot of work yet to do before we start talking about anything like a reversal, as I mentioned. Retracement for now on corn.
Okay. Soybeans.
Yeah, you go back, the thing we've done here today, we've gotten it up over the high we had here right at the end of last week, beginning of this week. And so you've kind of shored up the bottom here. The real key to the beans is going to be the ability to get a close up over the $9 mark somewhere, because psychologically that would start to help it out a little bit. But, we aren't going to generate or launch into any major move to the upside. The one thing I do know that I've been watchful of, it's still a little bit ahead. We do have a short-term trading cycle that's due at the end of January in beans, and maybe we ended up seeing that come early with the implication of the report today. But I don't see any major move to the upside at this point yet, but we are still working and building that base that suggests at least we don't have as much downside risk as we originally were concerned about.
Very good. I think you touched on wheat.
Wheat like corn, the key in wheat is going to be, and actually it took out the highs we had early this week, and it's going to be a matter of getting wheat up over the $5 mark. It's going to take that to start to roll any positive arguments or positive discussion into the mix at this point in time. But as we are here today, at least with the wheat, down here around 450, 460, we've probably again found the low end of the range, and now we'll have to work at moving some things forward. But with wheat, the one thing I'm cognizant of, we're in a window here for a 40-week low, and if we do get over $5, it might also be a 6-year low. And again, I go back. Wheat may be one all the corn people need to keep an eye on.
Very good.
Maybe a leading indicator.
Very good. Well, guys, we try to keep these in 30 minutes or so to be respectful of your time. And of course, we've got more information. We'll keep diving through this. Here's just our initial thoughts of how we reacted to the report. So we will have this out, so you'll be able to view it later and continue to check our writings that we do, the Market Watch. If you're not on that, let us know. And the other commentary and advice we do through AgriVisor through our website. So with that being said, thank you very much, and have a very safe winter.